Something interesting is happening with XRP right now. We're seeing extreme fear in the market, but institutional money keeps flowing in. Let's break it down. Here's where we are right now. XRP is sitting at $1.0674, down about 1% in the last 24 hours. Now, I know that doesn't sound dramatic, but here's the thing. The price has slipped below that middle Bollinger band at $1.0922, which tells us we're in a bit of a correction phase. But you know what I've noticed? Even with this pullback, we're still seeing $14.5 million in net inflows into XRP ETFs. That's actually pretty interesting when you think about it. Let me walk you through the technical picture, because this is where it gets fascinating. The RSI is at 44, so we're not oversold yet, but there's definitely some selling pressure. The MACD just crossed below its signal line. That's usually not great news in the short term. But here's what caught my attention. We're dancing right near that lower Bollinger band at $1.0465. That's often where smart money starts paying attention. All the major moving averages are sitting above us right now, which confirms this downtrend, but sometimes that's exactly where the best opportunities hide. Now, there wasn't any major global event that specifically moved XRP today, but I want you to understand something important. The dollar has been strong lately, and XRP has a nasty habit of moving opposite to the dollar. We're talking about a minus 78% correlation here. So when the dollar flexes, XRP often takes a little breather. It's just how these markets work together. On the regulatory front, well, no major news today, which is actually good news. You know what I always say? No news is good news in crypto regulation. And those ETF inflows I mentioned, they're still happening, which tells me institutions aren't worried about any regulatory surprises lurking around the corner. The mood right now is, let's just say it's pretty gloomy. The Fear and Greed Index hit 27, which puts us in extreme fear territory. Now, here's something my grandmother used to tell me. When everyone's scared, that's often when the best deals show up. Not saying we should rush in, but extreme fear, it usually doesn't last forever. The big players are doing something interesting. We saw over 100 whale transactions recently, and these folks moved around 8.2 trillion XRP. That's a lot of XRP changing hands among the big money. When whales are this active during a correction, they're usually not panicking. They're positioning. In plain English, the Elliott Wave folks think we're in the final part of a correction pattern, what they call Wave C. The Wyckoff analysis suggests we're in an accumulation phase, kind of like a retest, to make sure the support holds. Think of it like testing a chair before you sit down. The market's just making sure this level is solid. So what does the AI think? Well, this is where it gets really interesting. The short-term prediction is calling for $1.6165. That's a 51% jump with 98% confidence. Wait, that sounds amazing, right? But hold on. The 7-day forecast drops back to $1.0117, and then the 30-day prediction bounces back up to $1.5436. So we might be looking at a wild ride. Up, then down, then up again. But here's what could go wrong. That extreme fear could turn into panic selling. Fear has a way of feeding on itself. Also, if traditional markets keep running strong, money might flow out of crypto and into stocks. And those technical signals are still pointing down in the short term, so we could see more weakness before things turn around. Here's my take. I'm saying hold, but get ready for some strategic buying. If you're looking to add to your position, I'd wait for $1.05 as your first entry point, and maybe $1 if we get really lucky. Set your stop loss at 95 cents. You don't want to be stubborn if this breaks down further. For targets, I'm looking at $1.25 first, then $1.50 if momentum really builds. The combination of extreme fear, whale activity, and those ETF flows, it's setting up something interesting. That's it for today. Remember, I'm just someone looking at AI data and charts, not a financial advisor. If this helped you see the bigger picture, hit that subscribe button and give me a like. See you next time, and stay safe out there.